Okay, so you're ready to dig deep into fundamental analysis. We want to figure out how healthy the Indian Energy Exchange, or IEX, really is. And we've got all sorts of stuff to help us, like reports and presentations, even some transcripts from conference calls. Let's see what we can uncover.
It's not just about the numbers, though. We're going to be connecting IEX's performance to the bigger picture. Like, what's going on in the Indian energy sector? What about the rise of renewables and things like battery storage? We're taking a financial deep dive, but we'll see how it all plays out in the real world.
Oh, I love that. So we'll be figuring out IEX and also getting a glimpse into the future of energy in India.
Absolutely. Let's start with some key metrics that tell us how financially healthy IEX is. First up, revenue. We see it going up consistently with a compound annual growth rate of 16% over the last few years. And just looking at operating revenue, last year it jumped 15%. Even better, in the first half of this fiscal year, 2025, total revenue shot up to 322.2 crore rupees, a 21% increase year on year.
Wow, okay, so IEX is definitely bringing in more revenue each year, but are they turning that revenue into profit efficiently?
That's where EBITDA comes in handy. It stands for earnings before interest, taxes, depreciation, and amortization. Basically, it gives us a clearer picture of how profitable a company's operations are. So IEX's consolidated EBITDA for the second quarter of fiscal year 2025 was 151.2 crore rupees. That's a 25.2% jump year on year. And even more impressive, their EBITDA margin is a whopping 81%. This means they're keeping a big chunk of their revenue even after covering all their operating expenses.
Hold on, 81%, that's a really healthy margin. But what about the actual profit they take home after all the deductions and everything? What's their PAT looking like?
PAT, or profit after tax, is the real measure of profitability. In the second quarter of fiscal year 2025, IEX's consolidated PAT reached a solid 108.3 crore rupees. That's up 25.2% from the same quarter last year. So it's not just that their revenue is growing, their profitability is keeping pace too.
25.2% growth in PAT is definitely something to be happy about. What factors are driving such impressive profitability?
One key factor is their business model. IEX works as a marketplace, connecting electricity buyers and sellers. So even as the volume of trading grows, their costs stay relatively stable. Low overhead costs mean higher profit margins.
I see. So they're like a digital auction house for electricity. But speaking of overhead, are they managing their costs well? Are they keeping those expenses in check?
Absolutely. Even though they've had significant revenue growth, IEX has kept their operating expenses pretty flat. For example, their manpower costs have only grown at a modest 7% CGR over the past few years. This focus on cost control is a good sign. It means they have efficient management, which is another reason for those healthy profit margins.
So they're growing revenue, managing costs, and making some serious profits. It's starting to sound like a really good investment. We can't stop at the income statement. What about their cash flow? That's the lifeblood of any business, right?
Couldn't agree more. Cash flow is crucial, and IEX has strong cash flow from operations. They've consistently been generating operating cash profits since they started. Actually, in fiscal year 2023, their cash from operations hit a massive 278.5 crore rupees.
That's a huge number.
Yeah.
But how much cash do they actually have available? I mean,
Yeah.
having positive cash flow is great, but are they building up a reserve?
As of the second quarter of this fiscal year, 2025, IUX had a comfortable cash reserve, around 900 crore rupees. This means they have a safety net if anything unexpected happens, and they can keep investing in growth opportunities.
900 crore in cash. Wow. They're definitely not strapped for funds. What about debt? Are they using borrowed money to fuel all this growth?
Now, this is where it gets really interesting. IEX has been completely debt-free since day one, which is pretty rare these days, especially for a company that's growing as quickly as IEX. It shows that their management is committed to sustainable growth.
Debt-free. That's amazing. No wonder their debt-to-equity ratio is basically zero. They seem to be managing their finances really well. But let's dig a little deeper. I'm curious about another ratio, the PAT to cash from operations ratio. What's that tell us?
Great point. This ratio tells us how much of IEX's profit is actually backed by real cash flow from operations, not just from accounting tricks. A higher ratio means healthier financials. For IEX, this ratio is very strong at 0.9. This means their profits are supported by solid cash generation.
That's reassuring. We're seeing a company with strong revenue growth, expanding profit margins, robust cash flow, and no debt. So far, so good. But let's look at their balance sheet. What about their trade receivables? That's the money their customers owe them, right?
Yes, analyzing trends in trade receivables can give us insights into how efficiently they're collecting payments and if there are any potential risks. The numbers show a bit of an upward trend, reaching 147 crore rupees. This could mean some customers are delaying payments, something to keep an eye on.
Interesting. A small increase might not be a big red flag, but it's worth understanding why this is happening. Before we get too focused on the details of trade receivables, let's zoom out a bit and look at another key metric: asset turnover. What does this tell us about how efficient IEX is?
Asset turnover measures how well a company uses its assets to generate revenue. A higher ratio usually means better efficiency. IEX's asset turnover is a healthy 0.57, which suggests they're using their assets effectively to drive that revenue growth.
Okay, so their assets are working hard for them and they're generating strong cash flow. But to get the full picture, we need to look at the other side. How much are they getting for each unit of electricity they trade? What can you tell me about the realizations?
Realizations, which is basically the average price they get per unit of electricity, have been around 4.5 rupees per unit. This number is crucial. It directly impacts their revenue and profitability. Any big changes in realizations would ripple through their entire financials.
It seems we need to keep a close eye on both realizations and trade receivable trends. Now, besides buying and selling electricity, are there any other things IEX is involved in? What about third-party transactions?
That's an important point. We need to look at third-party transactions to get a complete understanding of IEX's operations. These transactions involve entities other than the buyers and sellers of electricity, like consulting services or software development.
So it's about figuring out any activities that are happening on the side which might be supporting IEX's core business.
Exactly. We need to know what these transactions are and how big they are so we can see how they're impacting IEX's financial performance. Are they adding to the profit? Are there any potential conflicts of interest? Any regulatory concerns? We'll have to investigate further to answer those questions.
Okay, so we've uncovered quite a bit about IEX's finances. They got impressive revenue and profit growth, strong cash flow, zero debt, and they're using their assets efficiently. But we also found some things that need more investigation, like those rising trade receivables and the impact of third-party transactions. Before we move on, I'd like to know how the market sees IEX. What about their PE and PEG ratios?
IEX currently has a PE ratio of 52.4 and a PEG ratio of 29.1. These are pretty high, which tells us that investors are really optimistic about IEX's future. They're willing to pay a premium for those shares because they think earnings will grow strongly in the next few years.
So even though their earnings right now might not justify those high valuations, investors are banking on their potential, huh?
Exactly. The market looks ahead, and that's what these ratios are reflecting. But you got to remember, high valuations can be tricky. They show optimism, but they also set the bar high for future performance. If IEX doesn't meet those expectations, their share price could take a hit.
It's a tightrope walk between potential and pressure. We've talked a lot about the numbers, but what about the people behind them? I'm curious about the management team at IEX. What's their track record like?
That's super important in fundamental analysis. We got to look at the leadership team's experience, their past performance, their vision. With IEX, we see a seasoned management team. They've got a proven track record in the energy sector. The chairman and managing director, for instance, has tons of experience and has played a key role in IEX's growth and success.
So they've got someone at the helm who knows how to navigate the energy industry.
Precisely. And they've built a strong team of executives with expertise in finance, operations, you name it.
Okay, the management team gets a thumbs up. But what about the competition? Does IEX have any serious rivals in the Indian energy exchange market?
Things get interesting here. IEX definitely holds the biggest market share right now. But there are others trying to get a piece of the pie. There are a few other power exchanges in India. But IEX is the biggest and the most established by far.
So, not a monopoly, but they're the leader. But even as the leader, they can't just sit back and relax, right? Things can change fast in any industry.
You got it. IEX has to keep innovating and expanding what they offer to stay ahead. They're looking into new markets like carbon and coal trading. Plus, they're planning to introduce contracts that last longer. These moves are key to staying ahead of the competition.
It's a fast-paced world, and IEX needs to be quick on its feet. We've talked about competition from other exchanges, but we also need to think about the overall energy scene in India. How is the government influencing the energy market, and what does that mean for IEX?
That's a big question. The Indian government is very involved in the energy sector. They're pushing for more renewable energy and promoting energy efficiency. These policies are creating opportunities for IEX, but also some challenges.
Okay, let's unpack that. What are some of the opportunities coming from these government initiatives?
Well, the government's focus on renewables is driving demand for IEX's green market, where renewable energy is traded. As more renewable energy capacity comes online, we can expect this segment to grow a lot. And as battery costs go down, they're also in a good position to take advantage of new opportunities in battery storage.
So they're riding the wave of India's green energy boom.
Yeah, they are. But there are hurdles too. The regulations in India can be complicated and they change all the time. IEX needs to navigate those changes smoothly to stay compliant and keep their operating license.
It's not just about grabbing opportunities, it's also about handling risks.
You got it. IEX needs to be proactive, talking to regulators and staying ahead of any potential changes to the rules.
And speaking of managing risks, what about ESG? How's IEX doing on environmental, social, and governance factors?
That's become super important in fundamental analysis, especially in energy. Investors are really looking at how companies perform on ESG issues because it can have a huge impact on their sustainability and profitability in the long run.
So it's not just about making money, it's about doing it the right way. What's IEX doing in this area?
IEX is making progress. They're promoting renewable energy trading, supporting energy efficiency initiatives, and even working on a platform for carbon credit trading. But there's always more they could do. For example, they could be more transparent about their environmental impact and their social responsibility programs.
Transparency is crucial when it comes to ESG. They seem to be on the right path, but there's always room for improvement.
Absolutely. Investors want to see companies actually doing the right thing, not just saying they are.
Earlier, we talked a bit about IEX's business model, but I think we should dig a little deeper. What are their main strengths and weaknesses? Can their model last in the long run?
One of IEX's biggest strengths is that they were the first to market. They were the first power exchange in India, so they've built a strong brand and have a loyal customer base. Plus, they operate really efficiently. Their return on capital employed, ROCE, is 34%, and their return on equity, ROE, is 33%. Those are excellent numbers, showing they're using their capital effectively.
Being the first definitely has its advantages. But what about weaknesses or threats to their business model?
The energy market is evolving, so IEX has to adapt and innovate to stay in the game. They need to keep attracting new customers, develop new products, and move into new markets. One potential challenge is the rise of distributed energy resources like rooftop solar. That could mean less reliance on centralized power markets, which is IEX's bread and butter.
So it's a potential threat to their main business. How's IEX dealing with that?
They're aware of the trend and are exploring ways to adjust. They're looking into peer-to-peer energy trading and are even thinking about expanding into microgrids. It looks like they're trying to anticipate and even shape the future of the energy market.
That's good to hear. But even if they're proactive, IEX's long-term success isn't guaranteed, especially in a rapidly changing industry like energy.
You're right, the energy sector is going through a huge transformation. Decarbonization, digitalization, decentralization, all of these trends could be good for IEX or bad for them.
Okay, we've talked about the competition and how the energy market is changing. Let's zoom out even more and think about the overall economy. What are some external factors that could affect IEX's financial health?
India's economic growth is a major factor for IEX. As India's economy grows, so will the demand for energy. That's good for IEX. But if the economy slows down, that could hurt them. Lower demand could put pressure on their revenue.
So they benefit when India's economy is strong, but they're also vulnerable if things go south.
Exactly. Global energy prices matter too. If oil and gas prices fluctuate, that can impact electricity prices, which then affects how much trading happens on IEX. And then there are global events like what's happening in Ukraine. That's disrupted energy markets around the world.
It just shows that even a company focused on India's energy market can be affected by what's going on globally.
Absolutely. The world is interconnected, and IEX needs to keep an eye on all these trends to make smart decisions.
All right, we've covered a lot today. We've analyzed their finances, looked at their business model, considered the competition, the regulatory environment, ESG factors, and even global economic trends. I feel like I'm starting to get a good grasp of IEX's financial health.
That's what we're aiming for. This deep dive is about giving you a deep understanding of a company's financial position. But it's important to remember that fundamental analysis isn't a magic crystal ball. It can't predict the future for sure, but it can definitely help you make more informed investment decisions. It gives you a framework for assessing risks and opportunities.
Okay, so now for the million-dollar question. How do we use all this knowledge to make good investment decisions? How do we turn analysis into action?
That's where the art and science of investing come together, and that's what we'll explore in the final part of our deep dive.
Welcome back. We spent the last two parts really dissecting IEX, looking at their financials, their business, and how they fit into the bigger picture of the Indian energy market.
Yeah, we've gathered a ton of information. Now the key is figuring out what it all means for investors.
Exactly. We have all these pieces of the puzzle, but how do we put them together and make an actual investment decision?
The first thing is to look at everything we've learned and see how it all connects. Their financials, their business model, the competition, the regulations, ESG, and even those macroeconomic trends.
So it's about seeing the whole picture, not just focusing on individual numbers.
Yeah, right. Once we do that, we can come up with what we call an investment thesis. Basically, it's a clear statement that summarizes our view of IEX's potential, like a short story that explains why someone should or shouldn't invest.
I like that analogy.
Yeah.
So based on our deep dive, what's the story of IEX? What's our investment thesis?
Here's a story that emerges from our analysis. IEX is the dominant player in a market that's growing rapidly. They have a strong management team, a business model that's proven itself, and a solid financial track record. They're in a great position to capitalize on the growth of renewable energy in India, and they're explaining other opportunities too, like battery storage and carbon trading.
That sounds pretty positive, but we also found some potential problems, right?
Of course, every investment has risks. For IEX, some of the key risks are increasing competition, changes in regulations, and those macroeconomic headwinds we talked about.
So how do we weigh the potential upside against those risks? Should we buy IEX stock, hold it, or sell it?
That really depends on your individual situation, what your investment goals are, how much risk you're comfortable with, and how long you plan to invest. There's no single answer for everyone.
Okay, let's say we're investors who are in it for the long haul, and we're okay with a moderate level of risk. What would you recommend?
Based on what we've seen, I think IEX is a buy for someone like that. Their history of growth, their profitability, and their place in India's energy transition make them a good investment opportunity for the long term.
So we're buying into the IEX story, but we can't just sit back and forget about it, right?
Right. Investing is an ongoing process. It's important to stay informed about anything that could affect your investment. Keep an eye on how IEX is performing financially, any regulatory changes, competitive pressures, and those macroeconomic trends we discussed. You need to reassess your investment thesis from time to time.
This deep dive has been incredibly insightful. We started with a bunch of reports, and now we have this deep understanding of IEX and how to evaluate an investment.
And that's the power of fundamental analysis. It's about looking beyond the numbers and understanding the story behind them. It helps you judge the quality of a business, its management, and its ability to thrive in a dynamic industry.
So as we wrap things up, what's the key takeaway for our listeners?
I think the biggest takeaway is that fundamental analysis is crucial for any investor. It gives you the knowledge to make informed decisions. But remember, it's not a crystal ball. It can't guarantee success. It's a process of learning and adapting. The more you learn, the better your investment decisions will be.
Well said. I feel like I'm ready to tackle the world of fundamental analysis now. Thanks for guiding us through this deep dive.
It was my pleasure. Remember, the journey of investing is a marathon, not a sprint. Keep learning and make smart choices.
That's a great way to end it. Thanks for joining us on this deep dive into the financial health of the Indian Energy Exchange. Until next time, happy investing.